Good morning, good afternoon, good evening, wherever you are in the world today. I hope you're absolutely fantastic. So I'm going to continue the testing of, or beta testing the current AI models on the market. And I thought it's obviously more fun to do it in the company of others. And it also puts on the pressure of getting these better when kind of failing in front of others, because that's never a good feeling. So hence, instead of doing the back testing in private and the real testing in real life, I thought, why not just be transparent? It's pretty cold here, so I'm wearing a cap and my hoodie on as well. And my blue light glasses, so I know that eye interaction is better and it creates trust and all those beautiful things, but I also got to protect my eyes, so I hope you don't mind if I wear them. Alright, so what we're working with is just updating the configuration of the market conditions into the AI input, and just making micro adjustments into the input to make sure that it's getting the correct market structure. So I'm just going to update some details here, and then we're going to run through the AI process of getting a prediction out. Okay, that's all up to date. Just executing the database to receive the information. Now I'm running the models and to give out their prediction. And the models are ready. So I'm going to suggest just to reach out to me on Telegram, because I don't necessarily have the YouTube chat room open. So if you want to chat, just send me some messages via Telegram, and then I'll receive your messages there. Just gonna let the members know that we are live. Alright, so I'm just searching for the correct turning point structure. And what that means is giving the model the correct input. So that means just watching how it builds along these support and resistance zones and waiting for it to find its confirmed turning point. Because if there is a new confirmed turning point out here somewhere, that means that I got to change the details of what goes in. So obviously, the determination of a successful anything really is good information in, correctly processed, and solid information out. My responsibility is to make sure there's as perfect as information as possible that goes in, so that the model itself can do its best job of doing the rest. So I was watching to see if it turns around there somewhere. Now how I can check that is by putting a spherical tool in the future to see whether or not the support and resistances line up. Okay, there's that big wick up. So it superseded that support line. I expect it to kind of just chill a little bit and then go further up. Let me just clean up how that looks. Okay, so this configuration is correct. What the model said was that there was going to be a bit of down action and then up. Alright, so that's what we saw over here. Bit of down action and then up. What I'm looking for is higher lows, higher highs. So that high is above there, that low is above there. This suggested down. So these are the models I'm beta testing. This is my favorite model to work with. So according to that forecast over here, it's going to go down next, reach the bottom, and then go back up. So I'm just going to have a look in real time whether or not that's what's transpiring. right, and let's see how it's turning down as anticipated. I'll just wait for that continuation to happen. Maybe just open up a silly trade here, nothing too big. I've already missed out on the opportunity entry, so I'm just going to put in like $100 for fun. It's going down too far, in fact. So I think maybe it's best to give that a skip. Condense this a bit more. But again, that's what the AI model said. So it said it was going to go down, and there it is going down. Pretty cool stuff. So let me update it to see what happens next. So it'll be 3. 202. And when the support lines I'm watching, I think is, well, it's done that move. So I'm thinking, let's keep an eye on that. All right, so whilst we are just waiting for price to unravel, perhaps it's a smart idea just to add some education into the mix. And I think right now what I'm going to talk about is leveraging. So leveraging can be a blessing or it can be a curse. Leveraging can turn a small account into something meaningful as you're utilizing far greater the capital than what you possess. Just waiting for this confirmed turning point. It might still be a bit early for it. Perhaps it's still building to the upside. Let's keep an eye. And yeah, so with leveraging, if you get it right, it's superhero stuff. If you get it wrong, then you can blow up accounts. But I suppose that's trading. Leveraging just amplifies that process faster. The benefit of it is leveraging uses other people's money. So OPM. This means that you can expand the size of positions and expand the size of your capital to much greater than what you would normally have on hand. And what that means is that the profit that one can make is far greater in terms of trading with leverage versus just trading spot trading. So spot trading is you put your normal amount of money in, maybe Bitcoin moves 3%, and then you earn in line with that. So if you put in $100 and Bitcoin increases in value by 3%, you earn $3. And yeah, I mean, $3 are not going to pay the bills. However, if you put a $100 in and use 10x leverage, then your $100 is now $1,000. So if you are earning, or if Bitcoin goes up in value by 3% and you're going long, so going buying low, selling high, going with the price moving up, then what happens is instead of having $3 as profit on a successful trade, it's now $30. So leveraging allows you to amplify the account that you're working with. How it works is that you temporarily borrow funds from whichever organization will allow it. Binance is one of them, Bittrex, Bybit. There are tons of ways to kind of borrow money for leveraging. So I'm going to close my door real quick. Some organizations are built on leveraging their capital out. So prop firms like FTMO, which is something that I use, will leverage all positions up to 100% and somehow do so in a way that the contracts aren't super tight. They're able to loosen that threshold so you can trade like you would normally, except for if you 100x leverage on Binance, for example, or Bybit, and the price goes the other way, you can get liquidated super fast. But with regards to prop firm trading, they've managed to deepen the leverage threshold so that it doesn't cut into the liquidation point of having an open trade. So a lot of kind of jargon words there. But it's just the way it operates. So there are a lot of different entities that offer leveraging. A popular one that I utilize is FTMO. And before that, I was using Bybit and Binance. However, again, those guys have pretty tight liquidation positions due to the size of the leverage. And with prop firms, you can access their capital, which doesn't have the same restrictions, and you still get to have access not only to leverage on more flexibility, but with other people's capital at your disposal. So with regards to avoiding liquidations or positions closing on stop losses unnecessarily, it's best to trade in trend. And trend will be ascertained from the higher time frames, or alternatively from the sequence of highs and lows that you've uncovered here on your trading time frames. So should this be a confirmed turning point, for example, then what we've got here is a higher high after a lower low. Therefore, there's a trend directional change here, and we're just waiting for it to confirm itself to be that case. As we wait for confirmations, I'm just going to continue getting the forecasts just until the AI models get a good grasp of what the market wants to do here. Cool. I love how some of the dynamics remain the same, even though the transition points were different. Just waiting for this price to go down in this direction or in that direction. Thank you, my love. Bye. Oh man, that's good. All right, so I've got a leveraged position that's open. I'm just monitoring the markets as to what to do with it. So the market's a little bit quieter now, which means less liquidity. So this is kind of just general chat, just general beta testing. And then when we get closer to open bell later this afternoon, and I'm talking about New York open bell, then I'll open the stream again and trade live there in line with the activity of where the market's anticipated to go. Around this time of day, traders tend to take their lunch break, so orders go in a lot less frequently. And you can see that's the morning activity running up before they go grab something to eat, or beautifully have something delivered to your front door via your significant other, because that's a winning solution. All right, and there it goes down again. So how I'm using the predictions. My favorite is this bottom model. I look to see whether or not it's a good idea to make the trade or hang back. Both are the second and third model are dipping and then up, and then it seems to be a similar pattern to follow, which is kind of either straight and then up, or down, or like up, down, and then back up. The top model could also be right in the sense that it's just saying next is low liquidity, then a dip and climb. So we're seeing a dip on most of them. It's just the initial bits are a bit different. So we're going to see the climb out there. This is saying low liquidity up front. Looks correct to me. This is saying a slight dip, then lower liquidity to follow. And then this is saying that we're going to get a little travel, climb, down, and back up again. And when I see these, not only am I getting the future of price action presented, I'm attaining whether or not it's worth getting into a trade. Now, ideally, what I'm looking for is this kind of setup. Nice, long, progressive moves in the same direction. If it goes down a little bit, jumps up to like a double top, breaks back down, goes up, double top, breaks back down, then I might as well just hang back and protect my capital until that's over there. So I don't think any of these are worth trading on just yet, unless this is what transpires. But I think I'm just going to wait for the next move to come in, just to confirm that it still feels that way. And that's how that's another way in which I'm using these predictions. To quantify and qualify which trades are worth getting into, because you don't want to get in and out of every single available trade. All right, and there is a dip as predicted. I'm still qualifying which model is the most correct, because the top model said that it was going to go flat for a little bit before it dipped. So I'm just ascertaining whether that's still the case. Or if it's going to dip and then climb. Because if it dips and climbs, then I want to miss this initial gully over here. Okay, so there it comes down. All right, so it's either model 2 or model 3 that's winning. The first model is not so much on point as the others. And over the next 5 minutes, I'm looking for where it bounces or not. Okay, cool. Nice continuation down along this support line, the 1/2. So let's continue talking about leveraging. When it comes to liquidation points, like for example with Bybit and Binance, it can erase your account, especially if you are using cross margin instead of isolated margin, as cross margin can dig into your account overall, and that's super problematic. I just want to see if I got a beanie because my head's cold. Yeah. So risk awareness is essential when working with leverage on the Binance markets or the Bybit markets, as so many people don't understand how badly that can turn out, especially to your account overall, when you're not informed on how to use it correctly. When the liquidation point, let me rather say, how the liquidation occurs is when losses exceed your margin, and the platform closes your trade automatically, often at a significant loss. Periods of high volatility, it's not a good idea to be using leverage. And going back to when to use when to use leverage, it's best to go in trend, but also away from the point where you can potentially have a wick come up and take away your position. So the liquidation point is a threshold that says we have to return the money back to the borrowers over here. If price continues to go in the wrong direction of what you said it was going to be, so for example in the stop loss direction, then we've got to protect the money that our borrowers have put forward. So that's where staking and everything becomes like leveraged money for the greater pool, and they can't not return profits to the lenders, otherwise they wouldn't have a business. So instead of a stop loss, there's a certain point in which the price cannot go beyond, and that's the liquidation point. So the exchange will automatically close the position at that point to protect the lender's money. And if you get liquidated, then goodbye position. So even if your stop loss is somewhere behind the liquidation point, it doesn't really matter, because if the liquidation point arrives first, then that whole position will go. And this is kind of what you see in the greater picture when there are like billions liquidated per day, is that they're using borrowed money and there's liquidation points and their trades don't go in the right direction, and then bang, they get liquidated by a wick, and it's just game over for that entire position, which accrues into the billions. Again, another reason why I use the way I use it, so I don't have to run into that problem, because when I started out in trading, I went into those kind of problems, and it wasn't a good feeling to watch that money disappear. So remember, my mouse is here as the kill zone on the 30-second, and then it still follows the support and resistance rules. It's just fascinating how MTOPS works on every single time frame, including the 30-second chart, in exactly the same way. However, you got to know the full strategy to understand that where the correct places are to put the geometric tool. Because if you put it there, that's wrong. If you put it there, as you saw earlier, that's incorrect. You gotta wait for confirmed turning point. So the strategy, and using the strategy as many times as I have, has allowed me to get into a position where I don't need everything else because it's hard grained inside of me. I can just look at the chart with just the overhang tool and identify highs and lows, which I think is pretty neat. What I'm looking for now is a confirmed turning point within this region, so I can put that information in. Let's see what the AI has got to say next. Yeah, that looks about right. Yeah, again, I don't really want to trade these conditions because I'm seeing the sideways action. So we've got a higher high after a lower low, which means that this is kind of tricky as a setup to trade. And then above that is also pretty similar to that. The top one says more of a downtrend, but I don't know how true that will be considering we're at a turning point over here potentially. I mean, unless we've got another turning point that's just formed right there. Then down we go. And that's pretty cool because the previous forecast said it was going to go down. And this forecast, even over here, says at least overall, like down overall, over, I'd say, the next 40 minutes. But just in a very kind of shallow way, which isn't what we want. We want to see those nice long transitions. Okay, so now it's just broken down that little threshold there. I thought it was hanging out for a while. And then it said, no, going down. that does look like a confirmed turning point. So I suppose it's time to put the information in and see if we should open up a trade. See how over here it says bottom up, and then what we saw on the chart is that it said it went down, went bottom, and then up. I'm just qualifying first and foremost if any of these are worth following in terms of if they were right. Well, is it worth opening up a trade on any of them? This one says it's going to go down and then flat, so there's not enough reward in there for me. Here, I mean, ideally, if you catch the top where the mouse is, ride it to the bottom, and then trying to trade in line with that, and it's absolutely verbatimly perfect with the market, then that's great. However, it's almost a little bit too risky for me, because should that not be the case, which is difficult to acquire because financial markets are what they are. Let's say, for example, when my mouse is over there, it gets into around about that threshold, and then out at that threshold, or maybe if you get into the trade around about where the mouse is moving back and forth, and then out maybe slightly or above or even over there, you're not making much profit. So when these kind of forecasts come out where they just mostly equal, I'm not a fan of that. What I am a fan of course, as I said earlier, are these trades over here. So we're just waiting for this kind of to play out. So now it seems like there's a bounce coming in, and then because it's the longer trade going upwards, then you can get in anywhere within that range. I don't know what to do with my fingers. Anywhere within that range, and then get out anywhere in that range, and that's pretty decent profit. So yeah, I think I'm going to go with this. And my model's like real smart. So what's happening is that it's not going to immediately open up a position, because we got this little bit of kind of hump, if you want to call it that, to get past. So it's going to wait to get rid of all of that, and then within this region over there, we'll get into there and then climb up. So it just misses all of this unnecessary bad entry points, gets into the optimum entry, and then rides its way up. All right, so again, over here we're just going through this initial turmoil, and then up we go. did you ask that of? I gave it something. I gave you one hours ago. Is it upstairs? Ah, look.
It's got a better.
He's on my phone. What's the message? Sorry, mommy says sorry. Dad, do you want to have some smoothie?
Yesterday that made me too hot.
Okay. As it was in the bottle, alright? Yeah. Do you want me to keep the smoothie in case you feel it later? I'll put it in case you change my mind. And there we have it. See how it said it's going to go up? And there we go. It's going up. Let's go new prediction. So what I'm looking for here is just a continuation to the upside. So I think the AI model for this little bit interpreted maybe an exaggeration of that little kind of hump, and then what's showing here, it's higher lows and higher highs. So we're getting a trend direction to the upside. I'm just waiting for the right time to get in. Love, is Tiger going on each corner? Okay. The delay in the position entry is so important to me because in the past I used to kind of be too late to opening up trades at the right time, or alternatively just not win with regards to the timing. And if you get in at the wrong time, if you get in a little bit too late, that makes all the difference as to your being right, but still not making profit. Yeah, so I think we got another turning point that's come in. Should be over here. And as we spoke about earlier, it's going to go up. That's what we saw. And now it's going up. And here's the truth about the markets is that it takes a long time for it to do stuff. Even on the 30-second chart. It takes a long time for it to move. Which kind of makes it boring and whatever, but if you get it right, you get all that money. Okay, so I'm going to take a break. I've got I see how I can also stream to X, which I'm quite interested in doing. So yeah, so far the models have been on point and accurate, turn for turn, being in the right direction, and yeah, a pretty good morning.